In the last Quant video, we said as long as price stays below $92.40, we will still continue to these sets of two targets down here between $86 and $87. We actually saw the pump over the weekend, followed by a dump today. Let's take a look at that. Before we get into it, don't forget to like, subscribe, comment, and share. Just as we got 1.6k views in this video last week, but only 190 likes. Let's get this up to 200 likes. We can definitely hit that with the amount of people watching these videos and all of the valuable information that I am giving out for free. So yes, again, we said that we can come up as high as 92.40 and you'd still be going lower than 88 where we were at the moment. It's simply because we met the first set of the targets. Now let's chill out, retrace before continuation. Nothing goes down or up in a straight line. So now we take a look at the Quant chart over here on that same time frame, the 1 hour, but we were jumping up from over here. This is where we were expecting this pump. We didn't get as high as $92.40. We can see that. So we were saying you can come up to there. Reason being is that this is our previous lower high. We can see that this high was lower, lower high, lower high. So you're allowed to come up to this price point and it still wouldn't be enough to form a newly formed uptrend. You'd still be in a downtrend, as even being in line with this price point, it would essentially be considered a lower high. So we didn't even get a pump up to that point, and then we spotted two bearish divergences happening at such key levels of resistance, that 200 EMA. So after forming that reversal wave, holding 92.4 as a resistance, we then formed a lower high nowhere near that point down here at $91.30, and we simply stopped around here because we are considered in a downtrend because of this 200 EMA. So if we ever get up to it, it's considered the top of the market, as this is what's keeping us in a downtrend. So this is the resistance, and right over there at that resistance point, we had those bearish signals, two bearish divergences. We had price kept on increasing over here, high, higher high, higher high, followed by a high here, a lower high, and a lower high. So there, just right there on the 1 hour, there was some bearish divergence. But also, if we take a look over here, this peak has peaked up higher than this move to the left, whereas on the chart, this is higher and this is a lower high. So we've got further bearish divergence. Basically, everything is telling you, giving you the signs that this is the area to be looking for some shorts on Quant, or getting ready for an opportunity where we could be picking up some Quant at cheaper prices to DCA. This is how you could also consider it. So we can see that we actually came all the way down to that 2 Fibonacci, as we were suggesting in that last video update last week. So don't forget, please do actually like, subscribe, and comment. It does help the channel grow. Yeah, it's really appreciated. And basically, although we have met this 2 Fibonacci at $87.57, it's not necessarily meaning that we are done with the downside. It could just mean in the direct short term, in the immediate short term, we are expecting an upside move. But looking at where the 200 EMA is sitting, last time around we didn't get higher than that, so it is a little bit lower than last time. Even if price pumps all the way into that area over here at $90.58, it still wouldn't be enough to flip this bullish. Okay guys, so now that we have reclaimed that key level support, we can see we lost it, had a nice bounce from here, reclaiming this key level support. All I need to see is a push through the 1414, because that's where the 55 is. This would signal a pump more towards this area over here, $89-90, and this is a big brick wall essentially, guys. So from here you still likely get hammered down. Even if we continue again, I'm going to say again, we can come up as high as $92.40, and you'd still come crashing back down to this $86 area. This is all because we are in a technical target to the downside, something that we spoke about on the channel last year, almost a year to date, when price dumped up from November time, where FTX capitulated. This price chart is not showing the highest point in Quant, but if we go over quickly to another one over here, we can see, yes, so we dumped off here in November, and this is where I was telling everyone we're going to get a dead cat bounce. Why? Such a big wave down. I said you can come as high as the 786 at 190 and you still get hammered down. So as high as that, not necessarily that you have to go there, because in fact I was saying that the golden pocket is always the most visited area of the Fibonacci. So expecting this to hit as high as 190, and then we had that dead cat bounce scenario. That's all it is. Big dump down, return halfway around there, and then return back down, and that's what's called a dead cat bounce. Then you wait for this key level of support, which we were saying $94 to $100. Lose that and we know what's going to happen, and then we will continue lower. And then finally in the last couple of months or so, we've finally got that $94 loss of support over here, which was this line, and we can see that it has been lost now. We did have a wick over here, but we can finally see there has been loss of the bodies, and so we are actually heading over to the technical target. Now the technical target is using that bearish dead cat bounce over here. So on this rise up, you start to create loads of patterns, and already over here I said, look, you've got a potential shoulder. This is now head, because this dip is so large, you're going to come back halfway, and then you got, look, another right shoulder over here. So here's your pattern, but this has got a much larger target to downside. I've made a video in the past suggesting that it might not get all the way down there. Let's just see. But the one that the most recent head and shoulders was this shoulder, head and shoulder, and I remember making some Twitter posts on there, because on the weekly time frame, I was posting on the weekly, and at that time I don't think it was looking a lot like a head and shoulders. I think this was the shoulder, the head, and people were saying that's not a right shoulder, but you could see a lot clearer on the daily time frame. And then we can see that the right shoulder formed over here, and now after breaking out, we can see that it played around for a long time. Let's not trick ourselves. But finally, after losing that wick support at $94, we got this move kick started, and yeah, we got a target down here about $83. You can of course bounce before then. Why? Because the target, as we look to the left, is lower than this low. This is a wick rejection right there. So if we draw support across, you can see that's pretty much where we're bouncing off of right now. So with that bounce, as I explained on the 1 hour time frame, you're bouncing right now. Let's just move this to the 2.272. so this is a different quant chart, and so it's bouncing off a different Fibonacci, but I guess on our quant chart that we're using, this would just simply be that that 2 fib, or around this area over here is the area that we're bouncing from. So then going back to the analysis, we need to climb back above this. So it's all well that we're bouncing off of this key level. It doesn't have that data on this chart, but it's all well that we're bouncing off that key level right there, but there's still a lot of work to do. And coming back to this chart, that work is to climb back above this lower high over here to change the general trend structure. Otherwise, eventually, no matter how high you come, as long as you maintain this as resistance, come up to there. You don't have to. I'd say we're looking where the 200 EMA is at as the highest point for a lower high, because this is our most recent high. So the 200 EMA is what's keeping us in the downtrend. Hold that, and then we do continue lower again, and could be losing this as well. But right now we are getting quite a strong bounce because of that specific candlestick over there. So the next the question is, can we break through all these moving averages, as well as reclaiming $92.40 to change this general trend structure? And that's pretty much it from today's update, guys. If any of you need further assistance, message me on Twitter. The links are in the description below, whether you want to do the course, the mentorship plan, which I'm helping 3 people at the moment to become self-sufficient traders. Otherwise, you can just join my community as well. Just private message me on x/twitter.com, or there's also links to actually go to the website already. But that's pretty much it from me. I'll catch you in the next one, and as always, peace.